Hello, it's the 15th of April. I'm Tunji Andrews and you're watching Business Nigeria. The Nigerian Stock Exchange has shed over 13% year to date. The Nigeria-China deal continues to draw so much speculation. In a minute, we share our thoughts on all of this. First, the headlines. Michael will be taking us through this.
Thank you very much, Tunji. Now, on to the top stories for today. The Port Harcourt Refining Company has announced that 28 million litres of petrol have been pumped into the domestic market to help address the current product scarcity that had crippled the economy. This is coming as fuel supply has drastically improved in Abuja and its environs. The state's IGRs were slashed by 25.18 billion naira in 2015. A 3.69% decline was reported in the internally generated revenue by the 36 states of the nation in 2015. That's according to the National Bureau of Statistics. Lagos, however, tops the list, reporting a 267.2 billion naira revenue in the period. And on to the next report. The Securities and Exchange Commission, SEC, has announced the extension of the new minimum capital requirement deadline for capital market operators to December 31. The deadline was extended by 15 months against the initial period of September 30, 2015. Back to you now, Tunji.
Thanks, Michael. But for a 0.44% gain on the bourse yesterday, the recent downward trend that preceded that was massive. Year to date, the Msci all-share index has shed about 13%. The most recent reason being the threat that Nigeria might be removed from the Msci Frontier Market Index. Adegboyega and I will be talking about that. Now, Adegboyega, let's start with a preview of the month and maybe looking into the month after.
Okay, Tunji, basically what you have seen is that the market spiked here. It spiked here, it was about 26,000 points. And from...
When exactly was that spike?
This was March 22nd, actually. So from March 22nd, all we've just seen is down, 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 and here it goes all the way here. Now, when the MSCI announced that they were likely going to remove Nigeria from the index, which was last week Friday, what we saw was the market reacted negatively. First trading day dropped about 2.77%. As we speak, as at yesterday, the market had dropped about 2.3%. Surprisingly, the biggest losers in that space have been ETI and ETI.
Let's slow this down and put this in context.
Okay.
How much does the frontier market, the MSCI index, what is the coverage size in the Nigerian all-share index?
Basically, you have the MSCI Frontier Index has about 121 securities. For the Nigeria Index, you have about 16 securities.
I know that
talking about
it
market
says
capitalization of about 10.1 billion as at end of first quarter March.
Billion naira?
Yes, $10 billion.
Oh, okay.
But
so
the thing is, asset managers are typically underweight, so you should expect in between 6 and 7% of that value actually invested. So we're looking at, give or take, slightly more than maybe about $500 million invested in Nigeria as we speak.
$500 million US dollars. But I mean, putting that again, you said that's about the Nigerian weight on top on the all-share index. If we were to lose the entire 500 million,
that's about 100 billion.
Yes, on the market, billion. How much are we losing?
If you look at it in terms of market cap being about 8.8 trillion, it's not that much.
Significant.
It's not that significant. But if you look at it also in terms of market participation, what we've actually seen, the trend we've seen is that for the first time in a very, very long time, you have domestic demand for securities far outstripping foreign demand for securities. So what it has done right now is basically you have seen an increase in domestic participation.
Well, I did see someone recently declare their assets over a few days ago, and the person was talking about the fact that he bought shares a few years ago at 2.5 million naira, and as today market value is 250,000 naira. So,
he was
what incentive is there for the domestic market to continue?
Well, you know, the thing is this, Tunji, the first thing we need to restructure is the orientation around buying of equities. Now, the typical orientation around buying of equities has always been that it is a quick win. Oh, I can put in my money and make monies that I can't make in a year. I can make it in 2 weeks or a month. So that orientation, first of all, has to change. Now, the NSE has done a lot of reorientation in terms of improving knowledge, improving corporate governance of companies. You know, typically you would have scenarios where results would have been outstanding for sustained periods. Now you don't see that anymore. So there has been an effort by the NSE to improve investor education regarding equities.
So can we say that the MSCI threat is more of bad news than the actual fear of their money going?
You know, the thing is this, right? The final decision will be made on April 29th, right? There have been 4 instances where the MSCI proposed removal of certain companies, certain countries from the index. There are 4 cases. You can look at Malaysia, Ukraine, Greece, and Egypt. On 3 out of those 4 occasions, they were based on capital control issues, where I can bring in my money, but when it comes to repatriating my money, there become issues. Now, with the exception of Ukraine, at every point, they were all reinstated.
Well, I guess this is more incentive for the managers of the Nigerian Stock Exchange to do better at creating more local participation. Now, after the break, Adegboyega, Elixir Partners head of research and strategy, will wade into the conversation to give some outlook for equities market and tell us just how much Nigeria stands to gain from the recent deal signed with China. Do stay with us. This is Business Nigeria.